It's almost 1 p.m. in Sydney and 11 a.m. in Hong Kong. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Japanese stocks drop, the yen steadies, traders positioning for a potential interest rate hike any moment now. A report says the Bank of Japan is discussing raising lending costs at today's meeting. Also ahead, Australia's core inflation rate unexpectedly cools, prompting traders to boost bets on a rate cut next week. Traders also digesting a tech rout in late US trading after Microsoft's cloud growth disappoints. And if that's not enough, we've also got a Fed decision on the way. But let's get to our top story right now with the Asia Trade co-anchor Sherry Ahn live outside the Bank of Japan headquarters in Tokyo. So Sherry, what are the chances that the BOJ moves today?
I mean, we have been watching today's policy decision, especially for its choreographing of the cutting of bond purchases. But then we woke up this morning with local media reports talking about BOJ board members considering raising rates. So now the focus is directly on whether or not the BOJ goes ahead and hikes rates again. Right now, the consensus for economists before today had been that they would hold steady because they don't want to do too much in terms of bond purchase reductions plus a rate hike, especially at a time when first quarter GDP shrunk, household consumption is pretty stagnant. But given what we're hearing right now from local media, there is a potential that the BOJ is priming markets for an interest rate move. Now, that would be very bullish for the Japanese yen, given that we have already seen gains in the previous few sessions.
Yeah, potentially how much of a boost could the yen get? Because, of course, we're counting down to potential Fed easing as well.
Yeah, debt purchases coupled with a rate hike could potentially be very bullish for the Japanese yen. Bank of America putting this combination of a hawkish BOJ at 145 yen per dollar. We have heard from BNY going as far as 140 yen per dollar. And this, of course, very important because we're watching JGB yields, especially as we are seeing normalizing steps from the BOJ. Quantitative tightening, how much and how fast does the cutting of bond buying happens? The BOJ does not want this move to be too dramatically and see the spike in yields because, of course, that could have repercussions in debt servicing, not to mention, of course, investments and household spending as well. But let's discuss all of this with my next guest. She's a former BOJ board member, Sayuri Shirai. She's also economics professor at Keio University. Sayuri, it's really great to have you with us. I mean, before we woke up today, we're very much focused on these bond purchase reductions. And then now we're talking about a potential rate hike. What's your view at this point?
Yes. So, in terms of short-term policy rate, actually this decision has to be made based on, outlook on the inflation. So at this moment, we don't really see, upward pressure on the inflation. So from that angle, there is no reason why the BOJ should raise interest rate. But at the same time, as you know, exchange rate, super cheap Japanese yen is a big issue now, and it's giving a lot of, negative impact on the Japanese consumption. And then some politicians also mentioned that. And then, if they are paying a lot of attention to the exchange rate, now, raising the policy rate is a good opportunity and a good timing.
Especially given that we have seen a little bit of more strength in the Japanese yen, so they don't give off the impression that they're hiking because of the exchange rate. But I do wonder, what about the economic picture? Because, of course, as I mentioned earlier, we had GDP contraction in the first quarter. Household consumption is pretty stagnant. Still, will this be a concern?
Yes. So, as you said, so economic growth in Japan is quite sluggish, and especially real consumption is dropping or sluggish. So, from there, we don't really see a, demand-driven dispatchers income price, cycle which BOJ won. So, it doesn't really make sense to raise a lot of short-term interest rate. But, but the exchange rate is a really big concern, because if you look at the export volume is not really growing. Yeah. So I think, it's time to it's good to take action.
when it comes to action on bond purchases, what's your view about the tapering size and pace of the cuts?
Yes. So when I look at the commercial bank's balance sheet, over these 10 years, the balance sheet expanded by 50%. And then, while this asset was growing, some of this increase was attributable to increase in lending from commercial bank to private sector. But a lot of, assets were kept in the form of, BOJ's current account balances with BOJ, which does not create a lot of fixed income. So there is, I think, a natural demand from commercial bank in terms of switching their portfolio from some of extremely large excess demand, excess reserve to JGB.
Does that mean that the restructuring of these bond purchases will happen domestically and that we won't see money being pulled out of global markets?
Yeah, I know a lot of foreign people mention about, there might be a shift from portfolio from investing in U.S. Treasury security to the domestic Japanese government bond. But I think restructuring happen more with regards to domestic, portfolio rebalancing because there is a huge excess reserve and just staying at the Bank of Japan's deposit, right? And it doesn't really generate a lot of income. And over these 10 years, the commercial bank reduced JGB holding nearly zero. So there is some fixed income demand from that side. So if BOJ make it clear about their strategy to reduce the asset purchases, I think they can do it without creating big disturbance in the bond market.
What does that mean for the Japanese yen? Because, of course, with higher yields, we've been seeing that strengthening of the currency as well.
Yeah, so, but since there is a demand for Japanese government bond, probably yield will go a bit higher, but it's not going to be excessively high. But at the same time, exchange rate is heavily influenced by Bank of Japan's monetary policy stance. So I think this making announcement about asset purchases reduction together with policy rate hike today, maybe to 0.25 or 0.3%, would be a good opportunity and probably have some good impact on exchange rate. If just doing asset purchase reduction, maybe market will be disappointed again, like what's happening in March and June, and then it might lead to the depreciation again.
Yeah, which led to that record intervention by the government, right?
Yes.
So in terms of sort of the time frame going forward, could we expect even another rate hike to come by year end, given if we do see these two steps from the BOJ would be incredibly hawkish?
That's a bit challenging because the domestic demand is weak. But over time, we may see real wages start to pick up because inflation will start to come down. So maybe we will start to see some positive impact on the consumption. So let's see. But another hike from say 0.25 to 0.3% is quite challenging, I think.
We know that we always talk about the BOJ and in terms of really not being concerned about the currency exchange level, but at the same time, of course, there are political pressures in this country. Moving now, would that help get away from political events in September, say even the Fed, for example?
I think if we are thinking about September or July, July is much better because right now, we still have a lot of depreciation pressures. Right now, yen appreciated thanks because the market anticipate BOJ's policy move, right? So without that, there will be a lot of depreciation pressures. And September, Fed may start to cut interest rate, so that will affect on the yen's appreciation. Then we have some time between now and September. Why doesn't BOJ take action now? I think it's better to do it now if they have some concerns about exchange rate.
The consensus so far has been that we would see a downgrading of growth forecasts, of inflation forecasts, especially for this year from today's meeting. Wouldn't that be inconsistent with a rate hike?
Yeah, that's true. So BOJ is adjusting real GDP growth forecast for this year. In January, March, it's downward adjustment. And it looks like economic growth forecast will be much lower than what they anticipated in April. So it doesn't make sense from that part that why BOJ should normalize interest rate. So that is a big issue. However, if we look at the real interest rate, it's in a big negative territory. So BOJ can still say, okay, monetary easing, still very accommodating. So it makes sense to reduce some part of accommodation. There's still negative interest rate. So BOJ can make story.
Yeah, I mean, it's how you frame it, right?
Yes.
It's a reduction of the easing, but not necessarily putting the brakes here.
Yeah.
Tell us a little bit about what we're seeing in terms of the wider economy, though. You don't think that there's room for another rate hike this year. Is that because we're not seeing the demand-driven inflation that we still want?
Yeah, actually over 10 years, even 20 years, the real consumption is always stagnant. I think it's partly aging. 1/3 of populations, people are elderly, they don't consume. They like to save more because of longevity, right? So it's very difficult to increase, consumption from that. So that's very challenging. I don't know whether BOJ can really achieve demand-driven inflation toward 2%, because right now inflation is about 2.8%. 60% of this inflation comes from just food and energy. It's a cost push. Yeah, nothing to do with demand.
And it's really changing the mindset of the Japanese public, right? That it's okay if prices rise, that it's okay to allow companies to hike prices.
Not necessarily, because over this period, over this 1-2 years, because there was a huge increase in the imported material and input costs, so there was no choice for the company to raise and pass on those increased production costs on their sales price. But at the same time, the consumption is very weak. So it's not easy for them to continue to raise, retail prices, right? Because a lot of competition, market is not growing. So a lot of competition among companies. So I don't know really, they can continue to pass on, and increase the retail prices for many years.
Especially if we don't see wage growth in real terms turning positive sustainably.
Mm-hmm. Yeah, so having wage hike continuously, it happened, but like 2% or 3% nominal wage growth is very challenging because corporate sectors largely highly unproductive. Labor productivity is kind of stagnant, so it doesn't really make sense, right? So we have to see, whether this wage story that BOJ really want to will be materialized.
Sayuri Shirai, thank you so much for your time today and coming out here in this sweltering heat outside of the BOJ. She's a Keio economics professor, and of course we'll bring you that decision by the BOJ when that breaks, Paul.
All right, thanks very much, Sherry. That is former board member Sayuri Shirai there with Sherry. Let's have a look at how Japanese assets are tracking ahead of that BOJ decision, which we are awaiting imminently. A little bit of weakness for stocks at the moment. The Nikkei off by 0.4%. Financials, though, doing pretty well. You might expect that better by almost 1%, though. Look at the yen. It's kind of flat at the moment, but it's appreciating pretty sharply during the month of July, and been a lot of volatility around the currency as well as we await this decision. A slight increase there in bonds as well. Just one other sector that's doing well. Hang on, I'll get to that in a minute. You can also turn to your Bloomberg for more on this story about the BOJ. Of course, we have a T Live commentary going on. That's TLIV Go. You can get commentary and analysis from Bloomberg's expert editors. And we're also going to speak with Javelin Wealth Management as we keep an eye on the BOJ. Now, I was going to say one other sector doing quite well at the moment is energy. And in fact, oil prices continuing to gain because we've just had the rather astounding news that Hamas says Israel has killed its political leader, Ismail Haniyeh, and he was in Tehran at the time. It appears this was an airstrike. The Islamic Revolutionary Guard announced that Haniyeh and one of his bodyguards were killed when their residence was hit in Tehran. So we're still awaiting more details on that. But that is the political leader of Hamas, Ismail Haniyeh, killed in an attack in the Iranian capital, Tehran. So there we see oil prices gaining at the moment. We have plenty more to come. This is Bloomberg. All right, plenty of catalysts for markets to digest today. Let's check in with Avril Hong in Singapore. What's going on, Avril?
Yeah, Paul, it's a case of pick your market driver. I mean, you had China, Australia data, Samsung earnings, but by far the big focus is on the BOJ. Will it or won't it hike along with quantitative tightening? Certainly a day ago, we saw some of those expectations being pared back, and then a late night local media report that kind of refuel those bets. We're watching very closely what we're seeing in JGB futures amid bearish positions being built up. If we see the BOJ not meeting hawkish expectations, we could see them vulnerable to a short squeeze. China data, factory activity shrinking yet again, but also commentary out of the Politburo hinting at easing. We're seeing that bond rally continuing, setting things up with a showdown with the PBOC. Chinese equity is really getting a lot of love, and we're seeing that turnover coming through on the ETFs that the national team favors. Flip the board. I also wanted to talk you through what we're seeing on the yen. In the past 5 meetings, it was only in the January one where we actually saw it strengthening post BOJ, which tells us that signaling here might be more important going forward. And there's also some expectation in the markets that regardless of what the BOJ does today, the yen could succumb to weakening. Flip the board again. As I say, we also had data out of Australia, unexpected cooling on the core CPI, and this is erasing those bets that we see a late cycle tightening from the Reserve Bank of Australia. This is the reaction across assets. Paul.
All right, thanks very much, Avril. For more, let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage here in Sydney. Garfield, that CPI number, perhaps a sigh of relief for many households around Australia, and we've got an RBA meeting next week. What does this mean?
Yeah, well, this means that the overwhelming expectation is that they will leave settings where they are going into the next meeting. It was somewhat finely balanced with the way different data signals have been going. Still some signs of labour market strength, plenty of signs of consumer demand weakness. The big concern was that that first quarter CPI report had been a big upside surprise. That was treated with a great deal of concern by the RBA and signalled that they really needed to keep a rate hike on the table. It is possible they would still discuss a rate hike next week, but if you think last time round they didn't think the case was strong enough, this time round they shouldn't think the case be strong enough as well. And certainly they might be unwilling to roil the bond market with even with sort of saying we strongly discussed it, seeing as 3-year yields dropped more than 20 basis points. So as far as the bond market is concerned, it's taken any rate hike off the table. And in fact, we've already got speculation going on the RBA could cut rates by the end of the year.
Yeah, let's talk a little bit more about that scenario because, yes, heading into this week, the feeling was, maybe we're going to see a surprise tightening. Where are we at in terms of markets pricing a potential rate cut this year?
Yeah, there's about a 50% chance seen in the swaps market for a reduction in November. 60 to 70% odds for December, and then if they don't cut this year, markets are pretty certain they're going to cut next year. And that's an acknowledgement of the ongoing weakness in the economy, which the RBA has talked about, the reduced concern about inflation, especially some of the moves the government made to do with power prices, and also the ruling about what the wholesale prices are going to be going forward. All of that means there should be baked in further slowing in the inflation rate. So if you've got it going in the right way already, it's likely to continue that momentum going forward. That's what markets are now looking for.
What are we looking for? Well, we've got a lot of focus on the BOJ today. We might talk about that in a moment, but also the Fed this week. Certainly a conversation around easing. Is it going to happen, though?
Oh, it's definitely not going to happen. Well, never say never, I suppose, but if it does, it would be an enormous shock. And in fact, Jerome Powell, even as he oversaw the strongest rate hikes in a generation, was very careful to try and make sure that not too much of that came as a surprise. So a rate cut this time round would be a big surprise. It's more going to be about how detailed are they about how close they are to cutting rates. Markets are certain they're going to cut in September. Traders have gotten very excited about the possibility that Powell will seriously acknowledge that. So there's the risk that if they say, well, we said we need more time to be confident that we're getting inflation under control. we're still not confident yet, but we think we will be confident soon, that might beg the question of sort of like how soon is soon. One of the difficulties with the Fed is it's got 2 jobs numbers and 2 CPI numbers to come between next week and then the following meeting in September. So it doesn't want to, tie its rate cut colours to the mast just yet.
In terms of tying rate cut colours to the mast, Bank of Japan it's its day today. We're awaiting that decision any minute now. NHK reporting we might have a rate tightening to 0.25%. How accurate have these reports been in the past?
They've actually mostly been reasonably accurate. One caution is the report didn't say they would; it said they would discuss it, which is sort of. Well, you would hope they would discuss it where they are now. It does, to some extent, set things up, and there was a rally in the yen overnight, partly on that, partly on geopolitical tensions, that if the BOJ disappoints to the dovish side, that could set off a fairly rapid rebound in the dollar-yen, weakness in the yen, which could all be a huge mess because we've had comments from the new FX chief about being against a weak yen, so that would put us all on intervention watch once more. So that's the dangers if they're not as hawkish as expected. If they are hawkish, and in particular if they lay out a very determined plan going forwards, there is plenty of potential for a rapid move stronger from the yen. We had a big clearing out of yen shorts last week, but there's still a lot of them out there. So if that crowded trade gets pushed again, we could see some very rapid moves to the downside for the dollar-yen rate.
All right, Garfield Reynolds, who leads our Markets Live coverage as we stand by for that decision from the Bank of Japan due any moment now. All right, we have plenty more to come on Markets Asia. This is Bloomberg. All right, let's check in on a couple of stocks that are moving today. Samsung Electronics having a good day, reporting its fastest pace of net income growth since 2010. Says it also plans to double the output of high-end chips that, of course, fuel the artificial intelligence boom. So we've got Samsung moving up by 1.25%. SK Hynix losing a bit of ground. Samsung Electronics, of course, looking to close the gap on SK Hynix when it comes to the manufacture of those high-end memory chips. Samsung, we heard earlier this month, had reported a 15-fold rise in preliminary operating profit, 23% rise in revenue, the biggest gain in sales there since 2021. Taiwan Semiconductor, meanwhile, losing a little bit of ground as well, off about 0.5% right now. Let's take a look at one of the stocks that's moving here in Australia as well. Rio Tinto also higher by 2.5%. Look, its second half earnings didn't exactly blow anyone away, but they were all right. Underlying profit was up 1.8% on year to $5.8 billion. That was in fact just a narrow miss, but the interim dividend held steady at $1.77. Iron ore suffering a bit due to low prices. Rio Tinto also had a train collision back in May that impacted supply. But the CEO, Jacob Stausholm, bullish about the outlook for copper, really bullish about the outlook for aluminium. And our interview with CEO Jacob Stausholm coming up later on Thursday on the times you see on your screens. Well, they're keeping us waiting there at the Bank of Japan. We are expecting a decision imminently. NHK reporting that the BOJ is certainly discussing rates. We could potentially see tightening, which would put the key rate at 0.25%. But of course, we're waiting on information regards a tapering of bond purchases as well from the Bank of Japan. And as we await that, we've got a little bit of softness in the Nikkei and the yen just trading sideways at the moment. Let's take a closer look at how markets are reacting to this imminent decision. Avril's keeping an eye on things. Avril.
Yeah, Paul, we're really seeing the BOJ keeping us at the edge of our seats. It's a nail-biting one. Arguably, this is what we're watching even more closely than the Fed decision this week, whether we see, as you mentioned earlier, that rate hike along with quantitative tightening. But regardless, the question is going to be whether we still see that rally in the Japanese currency or weakness post-decision, as we've been seeing in a number of the past 5 meetings. Today, we're seeing Japanese equities coming under slight pressure, declines on the topics, or the Nikkei, I should say, pretty flat on the topics. Chinese equities surge is one that we're really keeping an eye on. I mean, we had China factory activity shrinking for yet another month, but also some of the commentary out of the Politburo seems to suggest, to hint at easing to come. We are seeing the continued rally in China bonds, dollar China moving lower, as you can see there on the screens. A lot to rake through. Let's bring in our next guest. Back to you for now, Paul.
All right, April sticking around as well. Our next guest is Polka Mishra, partner at Javelin Wealth Management. And Polka, obviously, we have to start with the Bank of Japan. Do you think today is the day that we do see tightening, or is that coming and it's going to be bond purchases that are dealt with first?
Hi, Paul. I still think it is going to be the bond purchases, reduction of the bond purchases. We struggle to see Bank of Japan going any more aggressive than that. The views changed a little overnight. We've heard some noise from the media about possibly a discussion of a rate hike. And if we look at the last couple of meetings, that's how it panned out. The narrative was very different until very close to the meeting, and then we started getting these little sound bites which changed the script completely. Last time they ended up doing nothing after the expectation building up. Remains to be seen, but it'll be surprising if we get a significant rate hike this time.
Polka, even if we do see some hike in QT, do you think that in any way dents the attractiveness as yen for carry? I mean, we have some expectations that, you know, that attractiveness is just not being curtailed, even if we see BOJ tightening.
I think that's why the narrative is very important this time round. We've seen with the results, guidance is the name of the game. So what is said in the conference after the action is taken is more important. Yen shorts are waiting to jump back into the market, and that even though BOJ says they're not concerned as much about the currency, it could throw the currency into a tailspin if the carry trade comes back to full flourish. So yes, it will be a concern. I think that will be a big factor, not just the macroeconomics, but the currency that will end up playing a role in BOJ's decision making. They will have to go aggressive on the reduction of bond purchases to make sure that they put forward an aggressive stance.
Yeah, they have fumbled the messaging before, though, the BOJ. So what do you expect in terms of maybe from this statement as well as from UEDA? What kind of signaling are you watching out very closely?
Yeah, so clarity on the numbers now, on how much they're going to reduce. Anything less than bringing it down to 5 trillion is going to look weak. More than that, and what they're going to target to the next year. So I think market is expecting half or up to 2 trillion in 2 years' time. So they're going to have to keep that narrative close.
Polka, in the context of this conversation, what's the path of least resistance for the yen here? Because we've got to bear in mind that we're likely going to get a Fed move, or at least some indication of a Fed move in the next 24 hours as well.
Yes, so I think that's probably what might work in the favor of the currency, because there's strong expectation of Fed to at least indicate a rate cut in September in tomorrow's meeting or tonight's meeting. Part of least resistance is, yes, we get strong JGB purchase, reduction of JGB purchase, strong language from BOJ, convincing language from BOJ, followed by a very clear narrative from Fed that, yes, we're looking to cut rates. The risk there is if Fed does not give clarity, and we hear the same narrative that states will remain data dependent, we're not going to give any clarity right now, that puts BOJ, that puts the yen into a very weak position, and that's why it's a very difficult job for BOJ today.
And if we do see that coming through, and then potentially also that continued unwinding of carry, what are we going to see across assets? We saw last week how that caused all these ripple effects in the markets as investors reconsidered their leverage bets.
Yes, the unwinding, so I think there's been a lot of weight put on the unwinding of the carry trades. The impact on the currencies is strong, but I've heard questions around whether the whole sell-off in the tech sector and the overall markets was driven by yen. I think it's a small contributing factor. It's not the reason. So it's going to continue to have that impact on currency, and that's when banks like PBOC will benefit in cutting rates opportunistically.
Yeah, let's talk about tech, as you mentioned there, because I mean, there are so many market drivers this week. It's really like take your pick of which one, right? We have these big tech names already so far coming in pretty underwhelming, including Microsoft, the slowing cloud growth. But on the other hand, you have Asia, Samsung earnings, really stellar reports. How are you viewing the tech sector?
So we don't think that we're still positive on tech. We don't think that the story has ended yet. There's some volatility in the market, but 29% growth is at this point somehow not sufficient for investors, as we saw with Microsoft results. So it's more on the guidance, and investors right now are not patient enough to wait for that AI story to play out. So we expect that to continue to happen. However, remember, all these big tech is not just the AI story. There are strong fundamental companies. And compared to the 2000 crisis, which is being compared to prematurely, I think, these companies are flush with cash right now. We're not seeing IPOs of companies that have just put a .com name in front of them and then they get a stellar valuation. So I think market has been more disciplined around it. So it's more volatility than risk in our view at this point.
In terms of tech, we're seeing a real risk-on move in Hong Kong at the moment. We've got the Hang Seng Tech Index up 3% right now, and in fact, a bit of an everything rally going on in the Hang Seng. What's happening?
Still need to look into it. I think China as well has had a strong opening, so part of it could just be a momentum trade, not momentum, but just money moving into some sort of entry into the market. We had strong numbers from Samsung, so that also has a role to play in Asia tech. At the same time, what narrative we are getting out of Politburo, and that's been the case with China and Hong Kong, we get some language around reforms and policy making from China. Markets react a bit, and after that, we don't see a follow through, and then it retraces again.
I think that's a really good point. I mean, after the third plenum and then the PBOC easing, and in a way, I think the Politburo met expectations, but there are these hints of further easing to come. But what is your sense of how they're actually using more of monetary firepower versus fiscal firepower, especially as we head into the November elections out of the US and the risks surrounding that? Maybe Chinese authorities are seeing that more of a useful tool.
It is, but I don't think it is a sufficient tool. China's problems are much deeper, much larger to be addressed just by monetary policy. You're right. I think they're also probably waiting to see who comes into the White House in November and then make their fiscal decisions accordingly. But just to give you a sense, if, say, China was hypothetically to just print more money to address the big real estate problem, they would have to print as much money as the Fed did all the way from 2008 to 2014 to address only 70% of the unsold inventory. So monetary policy alone is just a drop in the ocean at this point.
And does that mean your expectations around the yuan? I mean, we saw a bit of a feed through from the strengthening in the Japanese currency last week and a bit into this week. But where are you seeing dollar China into the rest of the year?
I think China is going to continue to remain protective of the currency, and that's why we've seen reluctance of rate cuts. The rate cuts that we saw last week were also very opportunistic. Dollar weakened, great time while they protected the currency, let's get some rate cuts in, try to propel the economy. But a lot more needs to be done to propel demand in China.
We also see India among your conviction calls.
Yes.
Why?
It's a very strong fundamental story. We've seen good growth numbers come out of India. We've seen political stability, policy continuity. You saw the tax revenue has gone up, and now the budget has been quite well. The recent budget was very well balanced. So there's strong fundamental reasons to be positive on India. Infrastructure spend, large middle class, consumption has been a bit weak, but the budget is trying to address that. So it's a long-term fundamental core holding for us.
And an alternative potentially to the Chinese markets as well. Polka, really great to catch up with you. Thanks for sharing your insights on such an eventful day, no less. Polka Mishra of Javelin Wealth Management. Paul.
All right, thanks, Avril. Still to come, we are going to be keeping an eye, of course, on the BOJ. We also have an exclusive conversation with AIIB President Jin Lichun. Hear his outlook on Asia and the lender's strategy for financing the continent's energy transition. That's up next. This is Bloomberg. Welcome back to Bloomberg Markets Asia. Here's a look at Indian markets just ahead of the open. All of the major indexes in modestly positive territory at the moment. The Sensex better by about 0.25%, 2 minutes away from the open there. We've got the MSCI India now up for 9 straight months. That is the longest streak on record. Does, of course, raise questions about whether this is getting overbought, whether there is a risk of correction. But for now, that long rally just keeps on rolling on. And speaking of rallies, take a look what's going on in China and on Hong Kong at the moment. We've got the CSI 300, which was knocking on the door of correction, now up by nearly 2%. The Hang Seng Index in Hong Kong also in positive territory by a similar amount. And the rally in Hong Kong really covering all sectors. We've got healthcare performing best in Hong Kong, better by 4.3% at the moment. But yeah, it is a sector-wide rally, as I say. And we've got the Hang Seng Tech Index better by 3%. So we can have fun figuring out what's going on there. Our next guest, though, runs the Asian Infrastructure Investment Bank, a multilateral development bank, whose mission is financing Asia's infrastructure. Joining us to discuss his macroeconomic outlook is Jin Lichun, President and Board Chair at the Asian Infrastructure Investment Bank. Jin, thanks so much for joining us today. I just want to start off, if I can, because it is such a significant day in Japan as we await that Bank of Japan decision. Can you give us your overall view of the rates environment at the moment, how it's affecting your lending?
I think the Asian economies overall are doing very well. I came to Singapore to the 16th ASEAN and Asian Forum, and I could see that the ASEAN countries are working really together to push for their economic development and at the same time to deal with external pressures.
So in terms of global economic growth, how's that impacting the energy transition, which is one of the things that you're focusing on?
While the geopolitical issues and also the global economic situation may pose some pressure on some of these countries in Asia, but I think the Asian countries' determination to push for economic integration and to deal with climate change, the determination is very much firm, and I could feel that they would like to handle all of these challenges at the same time without relaxing their efforts.
Well, you recently made your first loan on climate policy lending. I believe it was a $400 million loan to Bangladesh. Can you tell us what that was for and what other loans you've got in the pipeline?
This is our new lending instrument, the policy and budget support for the members of the AIIB to deal with the regulatory challenges of those countries. The idea is to improve the macroeconomic situation and regulatory environment for those countries to attract the private sector investors to push for climate change financing, which would deal with the climate change consequences. So the Bangladesh project is the first one in the amount of $400 million, and we would follow up doing the same kind of projects for other countries in Asia and in particular ASEAN countries.
And can you tell us specifically what sorts of projects that money is funding?
You see, we finance infrastructure projects in our member countries, not just in Asia, but also in Africa, Sub-Saharan Africa, Latin America. And the focus is on infrastructure and also to deal with the climate change. What I would like to highlight is that infrastructure projects we finance should incorporate our financing for climate change mitigation and adaptation. They are not two separate things. Our infrastructure is to be designed for tomorrow, for future. And all of these infrastructure finance projects are intended to deal with the climate change, to reduce emissions and help those countries moving towards net zero.
So how much funding is set aside under that program?
You see, we have the corporate strategy, which says that 50% of the financing is for infrastructure by 2025. But indeed, in 2022, we achieved 56% of the total approvals for climate change financing. And last year, it goes up to 60%. And we will continue to do a good job in promoting the infrastructure investment and to deal with climate change. For ASEAN countries, we now have the financing account for 20% over the last 8 years and a half with in the amount of $10 billion. But we do not think it is enough. We need to enhance our efforts to further promote the financing for climate change and to mobilize private sector resources for that purpose.
You mentioned the project in Bangladesh a little bit earlier. I know you've been committing to Vietnam's Just Energy Trust Partnership as well. How much money are you committing to that?
Vietnam is now ramping up its efforts to push for infrastructure investment, and we expressed our interest in working with Vietnam to support their development programs. And during my recent visit to Vietnam, I had discussions with the Prime Minister and also the cabinet members. I promise we can at least to prepare $5 billion to start with. Supporting Vietnam's infrastructure projects, including for instance, the railway, rapid rail linking Hanoi and Ho Chi Minh City. And there are some other kind of projects which we think would be very much important for Vietnam's sustained development. To start with, to have $5 billion start with is very much important, and this is our offer. And I think if we can work together to develop quickly a pipeline for Vietnam, the resources will be ready.
Just also wondering if you've got any plans to, I know you have plans, how are your plans to take on loans from other development banks?
We work with other development banks like the World Bank's Group and AIIB, EBRD, African Development Bank, and Inter-American Development Bank. We work as a system. As you may know, during the recent heads of MDB's meetings, we promised we would work together to deal with the major issues faced by our members. So all of the MDs are working very closely together as a system, and this is something which you never saw 2 or 3 decades ago. I think this is a very good development, and I think the impact of the concerted efforts of the MDBs would be very positive.
All right, Jin-Lee Kuhn of AIIB, thank you so much for joining us today. Let's just check in on what's happening in Japan. Japanese assets, well, on the Nikkei at least, losing a little bit of ground. We've got the Nikkei right now off just shy of 0.5%. The yen at 152.57 as we await that Bank of Japan policy decision. And seems a lot of people are very interested in this. Some people trying to log on to the BOJ website, getting a network busy error. Please try again. The page you requested is temporarily unavailable, so that's not a terrific sign. We know some people are able to access the website, but others are struggling due to network congestion. So perhaps a signal of just how much interest there is in this Bank of Japan meeting, and we'll get you that decision as soon as we know it. Plenty more to come. This is Bloomberg. We're still waiting for the BOJ decision. We're not the only ones. The BOJ website having problems now. Let's get to Avril Hong for more on what's happening on the markets. Avril.
Yeah, we are seeing some of these disruptions on the BOJ website with this intense anticipation of the decision from the central bank. And certainly with all this attention there, we are also seeing the BOJ decision really, really late. I mean, we've seen on average, it's come out this hour at around the 30-minute mark. So the fact that it's, delayed in a way, I think is in adding to this anticipation that we could see that rate hike from the BOJ, and certainly the Japanese currency has been strengthening a fair bit in anticipation of this decision. But let's also talk through what we've been seeing in the past couple of weeks. I think that's also worth highlighting, because not so long ago we were looking at dollar yen at around 162, and then we got Japanese authorities intervening in FX, and that was really well-timed moved along with soft US data. This week after that, it was related to the Trump trade. And then, of course, we had all these heightened expectations of Fed easing. So that's really brought us where we are on dollar yen, now hovering around the 152 level. And of course, we're going to be keeping a close watch on this as the decision drops from the BOJ. We've also been seeing the Japanese currency in a way, I think in the past 5 meetings, we've only seen it strengthen that one time after the January meeting. Paul.
All right. Thanks very much, Avril. That is it from Bloomberg Markets Asia, Horizons, Middle East and Africa next, as we keep on waiting for that Bank of Japan decision. This is Bloomberg.